I think that the best way to understand Bitcoin is actually through the lens of understanding why gold became money. And I appeared on Real Vision last year to talk a bit about this. And it is the best avenue to understanding, because if you go straight into the technical aspects of Bitcoin, it's very easy to get lost. This is a very new technology. There's a lot of new terminology. It's very complicated. But I like to start with, and a lot of this is explained through an Austrian economic framework of why gold became money. And gold has to, or excuse me, money has to have five properties. It has to be divisible, it has to be durable, it has to be portable, it has to be recognizable, and very importantly, it has to be scarce. So many technologies or tools have served as money throughout history. We've had seashells, we've had cattle, we've had salt, but the world sort of landed on metals as the best tool that satisfied those five properties. So metals are relatively divisible. They can be broken down and recombined at low cost. Metals are extremely durable. They don't corrode or degrade over time very much. Metals are relatively portable. They have a high value to weight ratio, so you can move them across space relatively easily. Metals are also very recognizable, right? They have their value can be assayed or verified using certain tests. And then clearly metals are difficult to extract from the earth. So they have scarcity assurances sort of built into what they are. And so of the metals, the monetary metals specifically, gold was the most scarce. And this can be quantified, like Safety Namusa's book calls it the stock to flow ratio, which is essentially the inverse of the inflation rate. But the most reliably scarce metal, monetary metal, basically wins because it's the most resistant to inflation. So if I'm using that metal as a store of value, I know without needing to trust anyone else that its supply cannot be inflated. So it makes it the most superior store of value. And that's what gold was, right? In the past 50 years, gold has exhibited a stock to flow ratio of about 55, which is around just sub 2% inflation per year. So those are the properties that made gold be selected on the free market as money. And then if you look through, and then the paper we use today, for instance, that was really just meant, as we all know, dollars were once redeemable for gold. So what it was doing is that paper was resolving some of the deficiencies of gold, right? Gold it's heavy, so it's difficult to transact with day-to-day purchases. So it's much easier to use a dollar redeemable for gold than physical gold to buy coffee, for instance. And that's another reason why silver was kind of used alongside gold for centuries before paper-backed gold. And so looking at money through that first principles Austrian framework, we see that Bitcoin is superior to gold across all five properties of money. Bitcoin is essentially infinitely divisible. It can be subdivided and recombined at near zero cost. Bitcoin, as distributed information, it does not decompose. Bitcoin is infinitely portable. It can be beamed around the world at the speed of light. Bitcoin is infinitely recognizable, meaning that it is just speech or language. It's the most objectively discernible substance in the universe. And then critically, which I argue in a lot of my writing, that Bitcoin is the discovery of absolute scarcity. Before Bitcoin, nothing physical in the world could ever have a guaranteed fixed supply. So the only way we could ever have absolute scarcity, so far as we know, was in a digital form. So in that context, in that lens, Bitcoin is essentially the most perfect monetary technology the world has ever had.